This is Eric Mwatha with Mwatha.com. We are taking a look here at a market that is pretty much stalled in terms, it's higher for the day, but I would say it's stalled because you see that the Dow still remains up about 84 points and has been in that range for the last hour, maybe 2 hours. Now, I have been stuck on this gold trade. You know, we've been playing the gold trade short for a while, and I can't stop watching this because it seems like gold is about to go lower here, and I'll show you why I think so and why you might want to take advantage of the current settings before the charts break out. This is the DZZ, and I'm just wondering here whether we are about to move out of that range, which would be a short-term buy on this instrument, which is short the gold trade. And let me share with you the MACDs also look like they want to break out of a range, which is positive for this instrument. To me, short-term bearish again for gold and the silver trade. Now, if we take a look at let's take a look at DZZ from a daily chart. What I like about this from a daily chart, and I'm going to try and make this as brief as possible, is every time we've moved above this level, in other words, this line here, turquoise line, which I'm going to leave right there so we can explain. Every time we move above that level, we get spikes in this instrument, this ETF, and we got another move there, which was a move there higher. We broke down here, we began this big trade down, and ever since we moved above that level, which is here, and again we bounced off this level here with a nice low. We bounced off that level here, which was that low, I mean precisely. And you see here, what I like about this is the fact that we seem to be forming a double bottom there. I hope you can see that. Let me take that. You hope you can see the double bottom right there. And I think really what we need to do here is just, instead of sit and wait for it to break out, we can place some trades based on that double bottom there on the DZZ. So I think it's a buy here at $4.82, somewhere around there. But the ideal buy point for all of these instruments comes when they break above their weekly buy points, if you want to really wait. So the weekly trade is going to be a buy when it moves above 5.03 here. You can wait for that, but I suspect that with that daily chart, that should be your entry point right there around that level at $4.08. The other trade, of course, the gold trade, short gold trade, is a DUST. If you want to wait, I think they're all buys here. But if you think you want to wait for it to break out on a weekly level above 6.60. The charts are to your left. The other one is the short silver trade. And if you really want to wait and play it conservatively, wait for the ZSL to move above 54.54, which is the highest weekly close there. Again, we also need to see the RSI push above that level and make new highs if that trade is going to work. And the other idea here is the DSLV. Again, just needs to break out here above 30.65. It's very close to that level right now, trading at 30.13. So wait for it to move above 30.65 if you want confirmation that they want to move. If you want to buy them here based on that daily DZZ chart, which I need to bring back just to emphasize one small observation here. So the DZZ. Now let's flip this. If we wake up on Monday or sometime next week or whenever and we break below that level there, take note and get out of that trade. Close that trade, get out with a small loss if possible, because that's going to be like this trade here. Once we broke down here, we had this major movement low. So we are playing it right now with the idea that it's going to move to the upside. And I'd like to own it here because when it moves above 50, you're going to get another thrust to the upside. But on the contrary, should we over the next couple of days or weeks break below that level, you want to get out. So I think it's a buy here with a stop. Even if you place a stop somewhere about here at about let's call it about 4.75, which is this area here. Even if you placed a stop even at the 50-day moving average, a stop at about $4.70. You're only risking about 10 cents with the probability of having a major move for you down the road. So risking 10 cents on a trade is not a bad idea. So that's the idea that I have for you here. I want to go and just touch on this one just 1 minute. Sometimes I don't like talking about this stock, but everybody keeps asking me, what do you think? What do you think? And it's again for Apple. Everybody wants to know what's going on. You see right now, it has a chance of breaking out here with that. Something it hasn't done in months. So that could be the beginning of a trade. But when I look at my hourly chart here, I'm not as excited, even though maybe it's going to continue moving higher. But you can see, well, it depends on how you look at this. On an hourly basis, very close to breaking out, or at least starting now to trade in this area, which we were saying. As long as it stays in this area, which is where it's trading at right now, the stock could do well. So maybe Apple here, with this move above, is it 460? Maybe above 460 is where it starts moving higher. If it can stay above that level here, the stock is going to really be on a strong move. Otherwise, if it rolls over and over the next couple of hours or days, it moves back below that level, then all this is just a trap trade. We'll see how it goes. This is Eric Muada with Muada.com. Good luck, peace, and blessings.